Hi everybody, welcome to another update. Today we're going to compare Sotkamo silver with a US Treasury and see which of these two investments we should buy. Okay, I do own Sotkamo silver and you can see here silver is breaking out above 100, so it's probably a good investment. Now I think silver will go higher. When you look at gold, you can see it's going much higher. For this year, we will see another 20% upside. For next year, more than 50% upside from here to 8,000, and then even more upside in the future. Okay, so based on this chart, we know that silver will follow gold. That's always the case. So we're going to project these numbers for Sotkamo silver. What happens here, we don't know. It could keep on rising or it could start falling, but let's say that it starts falling a bit, okay? So the 10-year bond currently is at 4.2%. Let's use 4.5% discount rates. Okay, so 4.5% is what you get if you buy a US bond. This is Sotkamo's cash flow sheet, and we start with 2026. Let's say that they have 10 years of mine life, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. And the PE ratio is currently 3.8, 3.5. Okay, so at a 4.5% discount rate, this is the cash flow upside, and you can see easily a double. And we're going to compare this with US Treasury. So let's say you have $266 million and you're going to buy out this company. This is the market cap plus the debt, the net debt. So I'm going to use 266 million and I'm going to buy out this company. I could also use this money to buy a US Treasury bonds. So let's say 266 to 53098. And this is option one. I buy Sotkamo or I buy a US bond. So for this US bond, I get 4.5% interest per year, right? This is my principal. For the first year, I get this plus this times this, right? So I start with 266 and I get 278, and then that doesn't work. For this, we use this plus, here we get times 4.5% on this plus the principal, okay? So this is how it goes up. Let's see if this works. So this is 131 times interest, okay, plus the principal here. So we reinvest all of these bonds into this 10-year bond, and at the end of the day, after 10 years, you get 413. So what is the return on this? So this minus the principal divided by the principal. This is my return. So I get in percentage 55% upside in 10 years. So if I invest 266 million in bonds at 4.5%, after 10 years, I will get 55% return. Okay, so 266 goes to 413 million. That's this plus the 55% gives us 400 million. Okay, I mean, it's not a bad return. It's risk-free. You get 55% in 10 years from here. Now, what happens when I buy Sotkamo silver instead? And we're first going to keep this at 100 to see if 100 gives us good return. So in the first year, I just get, I invested 266 million. That 266 million is not going to return back because after 10 years, the mine is depleted. You are not going to get your principal back. Okay, so all of the equipment is worth nothing. That's all depreciated. So we just look at the cash flow. So first year is this net income. Okay. Second year, I'm going to reinvest this money times 4.5%. So this year, reinvest this money plus the net income of this year. Then you get this. Well, actually, I did this times this plus this. Yeah, plus of course this number. Okay, so you get this money plus the 4.5% on this money because you invested it, reinvested it in maybe bonds, and then plus the net income of this year. Okay, this, let's put this in this. Next year we do the same. We have the interest on this number that we get plus the net income of 2028 plus the principal of last year. Okay, and so on. We do this until the end of 10 years. What is my return? Let's see. Is this minus the principal, which is this number that I invested, divided by the principal that I invested. And this will be in percentage. So I get a 200% return here. 200%. That's a 3x. Okay? I get a 3x if I invest 266 million. At the end, I get 800 million, right? So if you do this times 3, you get this number. Okay? That's the end result. That's the principal. If you buy a bond, this will go to this number. And that's only 55% return after 10 years. This is 200% return. So I get 4 times more return. 50 versus 200. Okay? That is the difference between buying Sotkamo and buying a government bond. So already you see this is a better investment. So what should be, this is this to make it easier. Now, what should be the government bond yields to make me buy a government bond instead of Sotkamo. You can calculate that. Let's say 20%. Okay, 20% is exactly what I want because you can see here the return is about the same. So if USA gives me 20% for the bonds, then I would buy a government bond because my return would be 500%, which is almost the same as the return on Sotkamo. So at a 20% discount rate, Sotkamo would be fair value because I could buy Sotkamo, but I could also buy a bond. And you can see here on the NPV flowchart that at 20% it is fair value. You can either buy Sotkamo, get a good return, 6x, or you can buy a government bond, which also will give you 6x because you get 20% per year. Okay, but we are not living in that world. We are living in 4.5%. And you can see here, Sotkamo is much better than a government bond. Now, this is 100 silver. What happens when I use this here? Okay, so for this year, let's say we go up another 10%. And that would give us 110 silver. Okay, 110 silver for this year. Next year, we go here. That is about 50% higher from 5,000. So 150 silver minimum. So 150. Then in 2028, we will be at, let's say, 60% higher or 70%. You, let's say 5,000, 70% higher, 8,500. That would indeed be 70% higher in 2028. So I will use 170 and then let's say 180 for 2029. And then from here on out, we top out and slowly drop back down. Could also go much higher, but let's say we drop a bit, 170, 150, 120, 100, and maybe even go down to 90, 80. Because the world changes and we have deflation and silver goes down. Okay, but this is the trajectory. What is my return now? And this is calculated here. These are the net incomes in this scenario with the discount rates, etc. My return is now 350%. So that's a 4.5x compared to a 50% increase for a US government bond. Okay, with this trajectory of silver, you are going to make much more money with Sotkamo silver. About 7 times more. 7 times more money over 10 years. Okay, at this discount rate, and which is the current discount rate, you only get 4.5% for your bonds. And with this, you can actually 4x your money, 350% return, right? You started with 266 million, and now you have 1 billion, which is a 4x from here. That's amazing, right? That's indeed amazing to have a 4x upsides with the current silver price trajectory. Okay, so just to illustrate um, that buying these miners is much better than buying bonds. And that's why I will stay in this sector because there's nothing else that gives you more upside than this sector. Okay, considering the trajectory, considering the earnings, you can see here the PE will be around 2 and maybe 3 and then 4, but it's going to make a lot of money if silver keeps on rising like this. Much better than a bond. Okay, and I'll see you in next video.